I'm Ashton Addison from the Crypto Coin Show, and today on Blockchain Interviews, we have back with us Anish Mohammed, co-founder and CTO of Panther Protocol. Anish, welcome back to the show. It is great to see you again.
Thank you very much, and it's a pleasure to be back.
Likewise, excited to get some updates on Panther Protocol. I would love to start out our conversation by, first of all, just hearing a little bit more on your background and what led you to co-founding Panther Protocol, and then we can dive into all the rest of the details.
Sure. So I probably will have to say the following, which make me sound reasonably old. So I am one of the guys from the ski.crypt, what do you call the cypherpunk. So in the late 90s, I was there. I was interested in cryptography. I was interested in the impact of cryptography on society as a whole. At that point in time, in a larger sense, nobody thought the impact that crypto, quote unquote, would actually have on society would be there by just cryptography, right? Mm-hmm. There were a couple of cases. There was a case of PGP and a few other ones. Then, I went to a med school in between. Then I went to grad school to do cryptography. Then I went and worked on payment systems, micro-payment systems for Ericsson. And when I was in grad school, I was actually working on privacy. So for me, overall, the construct of privacy seemed to be important from a philosophical perspective, right? Mm-hmm. Now we have a very important election that's happening in the US, right? Can you imagine that election without having privacy? Effectively, if you were to vote, that you are, not allowed to tell, what I'm saying, right? Like, mm-hmm. Can you imagine US having an electoral system with no privacy? Why is it that we have so much of a challenge understanding privacy for other transactions, right? Mm-hmm. Like, I'm not suggesting that, when you're asked, will you be able to reveal it? Yes, we have to reveal it. If, for example, if the bank asks you, like, okay, this is a transaction that you would like to shed some light, if it's right and appropriate, it's absolutely in the best interest of all parties to actually do this. So, and given all the things that has happened in crypto, which is like, I used to be one of the guys in the cryptography mailing list. So Bitcoin white paper, never thought it's going to take, you have to be honest to yourself, right? Never thought that would take off the way they would. Then in around 2013, it so happened that Ripple guys asked me if I'd be an advisor. I became an advisor for them. Around 2014, 2015, I ran into the Ethereum crowd. So I knew Vinay, Stephen Toll, Victor Tron, all those guys. So Victor asked me if I would review the orange paper, which is Swarm orange paper. And then I was part of the Swarm team for a bit. Then as time went forward, I ended up working on a whole bunch of protocols. Well-known ones are like Boson, Boson, and other ones. And so around 2020, when lockdown happened, just prior to lockdown, I ran into my co-founder at a conference that happened in Mexico. It so happens that the panel was on privacy, and I was explaining, just prior to that, I was in CMU giving a talk on privacy preserving machine learning. So we had this conversation about, okay, there's all this thing that we could do with ZK, and there's this construct of privacy that we can actually have. And that's where this started the conversation. So the thing was like, okay, kind of, and for me at that point in time, that was like the third iteration of zero knowledge startup I was thinking of. And so there was an intersection of, okay, there's an interest in DeFi. We understand what DeFi is. There's an interest in sort of privacy in that sense. And in a larger sense, ZK has reached a level of maturity that we can actually do something. So this is how it all happened. So I ran into my co-founder. We talked about it. And like in June, we kind of started working on it. And I tried convincing a bunch of people. So I started out with one of my PhD office mates, Arnold, to join us as a lead cryptographer. Then Vadim, who I had worked with in another project. And then slowly and steadily the team grew. So Akaki, so
incredible.
Yeah, this is how this works.
Yeah, it's to be an OG cypherpunk and see the evolution. No one would have expected, it to take off Bitcoin and the rest of blockchain the way it has. But here we are, and now we're rebuilding the next version of the financial industry. And so a lot of people understand that don't really understand cryptography. They don't have a degree in it, but they know there's a lot of transparency in a Bitcoin address, for example, or any other crypto address. You can see into it, but they don't know the intricacies involved in rebuilding a financial system. I'm sure there's a lot of privacy, confidentiality parts to it. So in terms of those problems that need to be solved in blockchain, what are some of those problems? And maybe specifically, what are some of the problems that Panther Protocol is trying to solve?
So let's think this through in a simpler sense of being, right? So what is DeFi in a larger sense? We call it decentralized finance. What does finance do? Finance typically implies you have marketplaces. You have price discovery for various things. But what is it that a typical marketplace in the traditional finance world does? There are non-transparent marketplaces. And I normally describe this with the example of Renaissance Technologies, which was the hedge fund that Mr. Simon, who's no longer with us, the Simon who's actually the person who created the Simons Institute in Berkeley, which is a very well-known research institute for research, right? So, there exists such a thing where we have markets, whereas, price discovery, and we have this strange construct of a public blockchain. The strange construct of a public blockchain is as follows. Whenever you do deploy any strategies, especially in a traditional finance world, if you are in a dark pool kind of situation, your strategy would never be revealed. That is exactly why, if you were to try to find exactly how Renaissance Technology were able to provide north of 30%, 30 to 40% return on investment for like 20 plus years, how is it that possible? Nobody knows, right? But at the same time, we have this paradigm on the blockchain side where we have every transaction being visible and your strategy being publicly available to everybody. And also on the other side, there is this other challenge, right? You can see the depth of the market, right? So, you could pretty much make a lot of decisions. And this doesn't really help a well-behaved market in that sense. And also, it kind of takes away the effort you put in. It's kind of unfair in the sense of speaking. So imagine, Ashton, you were about to deploy a strategy. So to come up with the strategy, you put a lot of effort and you build the infrastructure to support you. You deploy it on blockchain. A lot of people are watching you. They all think you're a smart guy. So imagine I am looking at you. Now what I go to say the graph and find your smart contract that's there and ask you to keep track of it and maybe write some code to actually copy your trade, right? So effectively what happens is your strategy, which is supposed to be your effort in a traditional sense of rule, right, should be your alpha. I am leeching it, right? So all what that we were trying to do in Panther is just literally replicate what that exists in the traditional finance world and provide something similar in the blockchain world while being compliant and being composable and have the ability to meet the KYC, KYT requirements in that sense.
Yeah, no, that makes sense. And for those traditional finance institutions or players to want to use DeFi, they're not going to downgrade to a transparent system that everyone can copy. And once everyone finds out their address, of course, it's going to be on a list of, hey, let's see what BlackRock's doing. Let's see what these top partners are doing. Just copy them.
Yeah, this is exactly what the challenge is. So this is what Panther initially was built to actually help, let's say, solve, right? That was the kind of users. The users that could actually do this included the people who are normal consumers. The way I would describe it is like, remember, there was one person who actually gave the liquidity pool for the Uniswap when the Arbitrum airdrop happened, right? That person made like 2 mil, which is just completely nothing illegal about the transaction. But the amount of reputational backlash he had on X or Twitter, whatever you call it now, defensible Elon's fantasy, right? It was terrible, right? It's unfair, right? So that's the kind of things we were thinking from that end to the BlackRocks of the world if they really wanted to do some transactions. We need to have a mechanism, fast, efficient, confidential, and compliant, right? So this is what we need to have. And this is what Panda has been trying to do. Make the infrastructure available that enables doing this while getting the benefits of KYC, KYT infrastructure that already exists, ability to kind of comply by all facts requirements, right? And make sure that if there is other requirements that are there, regional or geographical requirements that are there, and still being able to achieve the results that we would like to achieve in the Web3 space.
So how does that get implemented? Is there privacy technology implemented through a smart contract or through the platform onboarding?
So the way I would describe is like when somebody comes into a Panther protocol, we would kind of check for them whether they are having the right KYC, KYT at that point in time. If they don't, we will send them to one of the KYC, KYT providers. So our current integration is with Purify, right? So you go to Purify. Purify is like any KYC, KYT provider. What they would do is like they would consume one of the services that actually can do KYC, KYT in a Web2 perspective, which is like APIs. Take your address, take all your documents, and then validate that. If the answer is a yes, then it's for the KYC and for the KYT a score in that sense. So that will be given back to Panther. So from that perspective, we have a mechanism where they would give a signature to one of our things. We have a specific mechanism to communicate. So we have a curve which is called Baby Jab Jab, and then there's a signature scheme called EasyDSA. Essentially, what this means is like somebody saying yes, this person has valid KYC in a traditional sense of speaking, and then it communicates to Panther. Now, Panther protocol as such knows you are like a KYC person, and protocol on your end, as you the user's end, derives a new address which will allow you to do transactions in Panther protocol. This is literally what we do. So in terms of the pieces that are there, the first piece is like the third-party KYC, KYT provider, which actually allows, the ability for any governmental agencies or anybody like that to check whether this has actually happened. So like, they could literally go to the KYC provider and ask them, okay, can you show us the proof that, Ashton actually has KYC? I mean, literally, they could go straight to them, right? And they can then provide the proof, right? And then, once that's kind of done, you as a user, if you want to reveal your subset of transactions while you're doing all the things. So what happens is you come into Panther, you then can go do transactions to Uniswap. So imagine during the year, in an imaginary world, imagine you were, I don't know where you're based. Where are you based, if I may ask?
Canada.
Okay, so I don't know about the Canadian regulations as such, but like in an imaginary world, if you are in Canada and you actually wanted to submit your tax returns for your crypto transactions. So what happens now is Panther would allow you to then create like a disclosure, which is called a selective disclosure, which you have a set of all transactions you have done across a period in time. So then you could return your equivalent of HMRC in the UK or IRS in the US kind of thing. I don't know what's called in Canada, but whatever that is, right? So this is kind of what we have built into the protocol. So effectively, you as a user have full control over the protocol. When I say protocol, it's like your interaction with the protocol. So you have control over your KYC. You can, in a world where we have multiple KYC providers, you can choose KYC provider that's compliant for the region. Then you can actually decide on what protocols you want to do transactions in, right? And then when you're done, you can choose whether you want to reveal some of this information to your tax authority, which is a pretty good idea because like if you want to submit tax returns, you better reveal the relevant information.
That's great to know. And with DeFi, poised to explode. I'm thinking compared to traditional finance, we're in decimals of a percent. I'm not seeing
Yeah.
a lot of focus on this kind of technology, which is going to bring the institutions in, and they're the ones that have the most capital. Do you think the current Web3 users and the crypto natives are underestimating the value proposition of inserting this kind of privacy technology into DeFi? Because I feel like not enough groups are focusing on it.
So there is a double-edged sword in that sense. The thing that is happening is like there are some instruments that are kind of offline that allow certain characteristics to be achieved, right? If you do an OTC, you still retain your privacy, right?
Mm-hmm.
So DeFi protocols don't allow you to OTC, but what I'm just describing is in a layer 1 or a layer 2, you could possibly do an OTC and get the results what you want. So, there is this question about, okay, the risk appetite, the technology adoption curve. Essentially what this means is how much is the risk appetite in terms of technology for all these major traditional finance providers, right? And then there's the what I call almost like, there's this construct called Sharpe ratio. Sharpe ratio would be like a risk-adjusted return on investment, right? We need to come up with a new term, which is essentially, what would be the equivalent of Sharpe ratio in the DeFi world, right? Mm-hmm. So what effectively is happening is the following. Sharpe ratio in the traditional world kind of describes a bunch of assets and instruments that you can play with. We don't have that kind of a thing in the DeFi world. What I mean by that is like you should be able to quantify not just a return on investment, but also the other bits that are kind of unknown, right? So there are some regulatory perspectives that are a bit unknown in that sense. So once that kind of gets stabilized, I believe if the alpha is on the side of our, let's call it the privacy DeFi, Sharpe ratio, right? For sake of a term, you're going to call it privacy DeFi Sharpe ratio, right? We need to understand that whenever there is privacy involved, the confidentiality involved, there is always a cost involved because we have to do some extra transaction. So this could be zero knowledge or anything else that we have to apply, right? So, what that implies is like, imagine if you have a transaction and the transaction cost is like, 30 bips, right? You probably will have a 5, 20, 30 bips extra on top of the whole thing to do a private one, right? Mm-hmm. So the alpha on this side, just the private DeFi Sharpe ratio has to be higher than the normal Sharpe ratio, right? When that happens, obviously, and there is some regulatory stability, as I would describe it, money is always going to go towards a place. It's like water, right? Water flows to us, local minima in that sense. It's like, wherever the lowest is, right? So both interest in terms of like interest from the institutions and capital will, effectively flow towards the local minima in that sense. So my expectation is whenever that happens, there will definitely be a lot of this. And definitely at that point in time, everybody will wake up. Mm-hmm. But the challenge then would be we don't have, this is the challenge, right? I don't know if you remember the DeFi summer, this is March 2020, right? Complete and utter meltdown, right? So none of the DeFi stuff was ready to actually take up all the requirement that was there. So this moment can happen again in the case of DeFi, but this time where it is like, I would say, rather than calling it private, I would say compliant DeFi, right? Mm-hmm. Or private compliant DeFi, right? Where this is like, we have the same kind of characteristics as our traditional finance. We have enough of alpha so that, there is this slight increase in risk. So because of the slight increase in risk, we will have to have a bit more gain. And we also have the slight overhead. So we need to have a bit more gain in that sense. So for a given instrument, if, say, for example, let's think in terms of real numbers. So if you were to buy treasury bonds, if you pay like $100, if you get $5 in coupons, right? So that's a 5% return, right? We have to do better than that. We have to do 6 or 7 in that sense, right? So only then will there be a real attraction towards this. But if it's above 7, say 8 or 9, well, I'm sure, in a very short period in time, like you can think of finance infrastructure as a greedy algorithm trying to continuously search for places, right? So the moment this alpha turns up, there will be an immediate, and assuming, as I said, clarity, regulation, and ability to provide, regulatory proof to authorities being willing and able to actually accept cryptographic mechanisms as proof. These are kind of things that a lot of the things exist, but I am not sure it reached the level of friction has reached a level where it's like comparable to traditional.
Yeah, I would love to see you coin that new term of the private DeFi Sharpe ratio. Maybe get a paper on it and we can take it to the next level. That would be great.
I shall definitely ask my friends and my lead cryptographer to help me on that. So, I have a couple of friends who are cryptographers and people who are being researchers. So, we typically have this strange conversation about all of this. Just like think at a meta level, because like we look at the Ethereum ecosystem and sometimes other L1s have this open conversations and try to understand what is it that's actually happening. So when you occasionally meet one of these L1 founders or co-founders, as I call them, right? You have this conversation to be a normal breakfast structure where you try to understand how they see things and how you see things and how much of a difference is how they are perceiving it versus as like a macro meta observer. How do you see, things evolving?
Mm-hmm. And you mentioned there about a little bit of increased cost to implementing all these extra functionalities for the value that they provide. I'm curious on your thoughts on the balance of, for decentralized finance, does the privacy solution need to be fully decentralized versus centralized? And does that affect the user experience? Does DeFi need to have DeFi privacy, or can it be a mixture of both?
I think, in my view, again, I am not a regulator. I had been a retail banker for a period in time, so I have some exposure to how banking works. Between my time in consulting and time in retail banking, I think we might have done like 5 or 6 years. So a reasonably senior level, mid-senior level. So I'm exposed to a lot of this regulatory stuff. My take here is if we could actually start off from somewhere in the middle, right? Because you can't bootstrap anything in a very decentralized way. And that's very dangerous. You can completely lose control. And anybody who is trying to do that might end up in a very tricky land, right? So we need to have a mechanism where, based on building trust with the regulators and building trust with the people that really are concerned about some of these challenges, then we might be able to move from where we are, which is somewhere hybrid, to, hybrid essentially what this means is you have some entity somewhere on chain that can actually, you need to have some entity to hold relationships with the KYC provider, right? You can't arbitrarily have a protocol hold a relationship. Protocol is not a legal entity, right? A KYC provider can only have a contract with a legal entity. So you need to have some mechanism. Mm-hmm. So that's there. And also, for all the regulators to come talk to somebody, you need to have some ability to interface with the traditional, right? So this is kind of what I've said, you can have that. And then if the regulators are happy and open with it and are okay the way that, you and I deal with the bank. When you go to the bank to take a small amount of money, they don't ask you for anything, do they? No, just your card, right? So you could actually have this. So the way I'm imagining this is with small value transactions, you could be completely decentralized. Mm-hmm. If I'm buying a coffee and I do some I know this is silly to buy a coffee, me doing a DeFi transaction, but imaginarily, right? So, you and I have a bet. Let's imagine this, right? You and I take a bet that on say one of these protocols, something is going to go up or down. And, if I lose the bet, I'll buy you a coffee, right? So I lost the bet, I buy you a coffee. So that is a DeFi transaction in that sense, because we have to validate what happened in a DeFi protocol, and then I have to pay you a coffee, right? I know this is really made up, but it's very possible, right?
I'll take it.
So, yeah. So I'm saying, like, then what happens is like, that shouldn't require a KYC, KYT, right? It's a coffee, right? The cost of actually doing that KYC might be more than doing cost of doing cost of the coffee will be less than cost of doing a KYC and all the rest of it. So it makes no sense. So that's what I'm saying. Like, you need to figure out, like, it's not up to you or me, but the regulators to understand the risk tolerance and where is it that they really want, the kind of what I call line, like a dotted line, maybe a very dark line, or other things like. Does it make sense?
Yeah, definitely. One thing I want to throw into the conversation, because I feel like a lot of people are excited for it and they probably underestimate the potential for it, is artificial intelligence and AI in trading on the DeFi side as well. You mentioned at the beginning about zero knowledge proofs, how that also works in the protocol. I'm curious on the balance between using AI and using zero knowledge, and are they competitive? Do they complement each other? How would that work in something like this?
Okay. So I will do this. So this pile of books over here are literally on LLMs.
Wow.
Okay. That's all on deep learning and LLMs. Okay. Now that you asked. The same way that I spend a bunch of time on doing ZK and MPC and other things, I've spent over a period in time, starting from the days at Cloud Compute. So I was involved in writing the early Cloud Security Alliance Guide, version 2.1, the Cloud Bias Decision Guide, sat on the ISO committee. So going back almost 20 years ago, I was involved very heavily in the cloud. And then when big data became a thing, that was a thing that I worked on. Then data science became a thing. I worked on that, built anomaly detection platforms. So the way I think about it is like, it is a strange paradigm you can think of, which is essentially ML as like a lossy compression mechanism versus, cryptographic mechanisms trying to create confusion and nuisance, so to speak, right? That's one way to think. But on the other side, you can also think of it as like, two set of enablers. What I mean by this is like the ZK can actually enable verifiable compute. Okay. So what this means is there is this things like, verification of the source of data, verification of the data engineering pipeline, verification of the machine learning compute, right? So for all of them, ZK could really come in handy. So when you want to actually have explainability, or you want to have proof that it's being done the right way, ZK could absolutely help you achieve the things that you want to achieve in the world of AI, especially when you have this challenge where, biases, when they get in, and they will have significant impact on humanity, right? We already have the X risk question. I'm not even going the X risk question, the existential risk question. I'm just staying way closer to what we have normally, and I'm just describing what is it that we can actually see, right? So I'll give you a good example to give you how ZK would actually help ML. So, when you have a credit card, I'm sure this applies to Canada as well. You have a credit score, right? And you and I don't know what these guys do for the credit score, right? I would like to see transparency. I would like to see the proof that the data sources they have on zero knowledge. I would like to see the proof of computation on zero knowledge. That to me is a fairer mechanism, right? That is how I think about this intersection between AI and ML in one sense of speaking. There are other ways to think about it as well. I mean, that probably will take us a whole different podcast. So I really don't want to be talking about ML and LLMs and Gen AI and GANs and all those things. So yeah, I mean, I've been interested in that for a very long time. I've actually taught ML for finance and privacy preserving ML. I think I already mentioned how this protocol happened. I actually was, literally came back. I'm not sure which sequence was it. Like, I saw my co-founder and then went to CMU to teach, or the other way around. So it's like, as you can imagine, like I always had this interest in all these things, which is effectively a strong sense of understanding of ML, a lot of interest in existential risk, a lot of interest in cryptography, which is actually going to be enabler in my head, right? So there is always this mention of TEs by a lot of people, trusted execution environments. That's also something that I'm interested in. I have actually a paper on that as well. So that's like a long while ago, 2007. So this is why I kind of say, like, all these things are stuff that I worked on a long while ago. And when it becomes into fashion, I'm like, oh, yeah, this is something that now I need to go into.
Yeah, well, I feel it's only going to get more prominent and functional, hopefully, within these protocols and hopefully add more value.
That is one way to think about it, right? Like, as with all things, there's always things can go both ways, right? So now in the AI world, the biggest arbitrage is being able to get hold of GPUs. So if you knew, CEO of NVIDIA, that's a big alpha. You can get a bunch of AM100s and H100s, and you're made.
Yeah. And, you mentioned that example about the credit score. I feel like the zero knowledge proofs that's a great example of like, hey, they want to show the proof of the computation, but they don't have to show every line, right? And that's sort of the same with Panther Protocol. Hey, we want to prove, say you want to see this transaction. Sure, we can show you and we can prove that it's done, but we don't have to show you all the code and everything, right? And that's really the crux of it.
Yeah. The biggest power is the power of zero knowledge. The zero knowledge has two constructs in addition to zero knowledge mesh. It's called completeness and soundness. The soundness bit effectively means as long as you tell the truth, the other party will be convinced. If and only if you tell the truth, right? And the second bit of completeness is like, as long as you tell the truth within the bounded period of time, you will be able to convince the other party. So you could think of this as like you and a not so trusting, regulator in that sense of speaking. The regulator could be assured with no doubt that you can only convince them if and only if, you're telling the truth. Secondly, you could be convinced that the regulator will be convinced within a bounded period of time. Depends on the model you're applying, whether it's computational or information theoretic or otherwise. I hope you get the intuition of that.
Definitely. And, we've talked about a lot of great technologies. I'd love to know a little bit more on the implementation and just on Panther itself. It's a huge feat to actually get all these institutions onboarded and get them working with all this great technology. I've been following along with the protocol. I know there's some test nets and the road to more growth. Can you talk a little bit about what's the current development phase and where you guys at with all of this implementation?
Sure. So, if you were to ask somebody like, how close are you to finish kind of question, it's like how long is a piece of string kind of question. So we kind of finished, phase 7, phase 8 is kind of there, which is kind of, tricky for testing certain things. So let me explain what this means. So when you want to test something, you really can't expose some of the things to public investors because, the various regulatory requirements. So we have to find artificial ways of doing it. But very, very soon, as soon as we have some regulatory clarity on how we could test, we should have a Panther Protocol on testnet. So in what day is it today? 12. Like in a couple of days' time, we will have our audit, right? So most of the stuff is done. The audit is going to start. So one of the service providers is actually going to start audit next week. Yeah, next week, right? So, we are, as I say, very close, very, very close. So you have a final audit. First audit was complete. Second audit is here. My expectation is like, an audit is like a 10-week process. By the end of the process, we should actually have, the protocol on the mainnet, assuming we have regulatory clarity. The regulatory clarity is a very simple question. Is there a so-called entity who has what they call a WASP, right? It's the license, right? wants to run this thing. So if that's the case, job done, right? Otherwise, there is this legal opinion that need to be required as to what region would allow us to do what in which way, right? So that's a question that I'm not a lawyer. I can't give an answer. It's with the lawyers. We have engaged multiple lawyers. We have paid so much money to so many lawyers that I sometimes think, I'm in the wrong profession. You should have been a lawyer to make a law. If you were working for making money, you should go be a lawyer and make more money rather than be a cryptographer or a CTO or whatever you call yourself.
Yeah, no, that's great insight, and I agree. But I also know that life isn't all just about money, and crypto is great, and the numbers on the screen are great. But you want to follow your passion as well. And I know that when cryptography was just a bunch of cypherpunks in the '90s and Bitcoin didn't exist, you weren't in it for the Bitcoin because it didn't exist yet. And here you are, 20, 30 years later, we're still at the beginning of Bitcoin and the crypto world. So this is a decade to century-long process to move everything on chain.
You are absolutely right. Like if you were to think about, if you were to draw a timeline showing evolution of money, and you look at how much time we have had in a crypto sense, right? It's a dot, right? So we had the construct of money at thousands of years, right? And now we have here, in the last 10 years plus, right? 2008, 2000, just call it 2010, 15 years, right? We being generous, right? That's nothing, right? So, a lot of things need to be understood. And that's also the thing that we need to recognize. Society has been changing really fast. So, the generation boomers versus generation Z versus generation X, all of them have very different expectations and experiences out of the whole thing, right? And what you need to also understand is Generation Z is going to have a significant influence over a lot of things. So in the US, if you were to think about this, one of the key demographic that will decide versus Trump versus, Harris is going to be who, right? So, 18 to 34, right? That's what this is. And what I'm kind of indicating is the people who are in 18 to 34 are more exposed to the evolution of cryptography. They're more exposed to the use of, they grew up with phones, right? They grew up with, Facebook. They grew up with other things, right? So, for them to adopt cryptographic mechanisms and cryptocurrencies, that might be a much more natural fit versus somebody who lived with a piece of paper, walked around with a piece of paper. That's what I'm kind of saying. So in a very large sense of speaking, if an alien were to come into Earth and were to look at this, look at the cryptocurrency thing, they will go, interesting. We are not sure it's from this part of the world. Joking.
Definitely. And we talked about a lot of great technologies. Is there a place where people can continue to learn more? I'm sure there's so many places, but just about Panther Protocol and what you guys are working on with ZK, other privacy tech. What's the best way to learn more about that stuff? What Panther is doing with it, and also just to follow along.
Okay, so Panther has a bunch of docs that's there. So I believe docs.panther. I don't know whether it's IO or org. So what has happened is we've moved a bunch of things, and this is where the original destination of the protocol is going to be, is the foundation. So the documentation are partly migrated in some process of migration, but whenever the protocol is all done, it's going to be with the Panther Protocol foundation, so panther.org. So, that is where this is going to end up, and that's where there'll be all the documentation. But in the interim, the development entity that's there is developing the thing, and we will host some of the documentation, but definitely it's transitional. It's on its way towards the foundation. Foundation is going to be the custodian, the guardian, the watering and manuring of plants. You know what I'm saying? So all of that is there, kind of going to be theirs, and definitely that'll be there. But our Telegram channel, there's enough staff. There's a bunch of people who go on various podcasts and other things to explain stuff. we have had multiple hackathons in various places. The most recent one that we sponsored was the one in Zoo Village. I don't know if you heard about Zuzalo. Vitalik gave a bunch of money again. Vitalik was there as well, so I met him briefly while he was there in Zuzalo, right? So we sponsored the hackathon there. So, so we continuously offer opportunities for people to actually interact with us. And we are generally open to answering questions. And we do give talks, both in hardcore cryptography and, everything in between. And, we're trying really hard to make sure that the world really understands what we built. There is no point in actually, having built a protocol that nobody really knows what it does. Nobody really is able to use it, right? You can build the best protocol in the world, but if nobody uses it, it's as good as nothing.
Mm-hmm. Yeah, no, great insights. And I can leave a link to the docs as well and the platform in the show notes below. And I appreciate you taking the time, Anish, out of your busy schedule to explain all of this. And yeah, the education is key. Understanding the value in these technologies, and hopefully people that are more innovators at the forefront, realizing the potential this has when the financial industry moves into this. There's going to be billions or trillions moving in. So I feel like it's a good time to be paying attention. I appreciate your time today, and all the best on Panther Protocol and all this technology moving forward. And let's definitely follow up in the near future.
Thank you very much. It's a pleasure talking to you. Thank you all very much.